afternoon. Happy Friday. This is Shawn Labelle of the Dekker Hewett Group. It was another positive week here for global benchmarks as we continue to build on some nice gains here so far in 2023. There was nothing in particular really moving markets higher this week. It was just some slow and steady gains. Although we did get some reassuring data out on Wednesday. We saw the CPI, the Consumer Price Index inflationary data, come out for the month of December in the United States. The data came in exactly in line with expectations, with year-over-year numbers up 6.5% and the monthly number down 0.1%. Now, a bit of context in those numbers, that monthly drop of 0.1% was the biggest monthly decline since April of 2020, so right in the heart of the pandemic. While that year-over-year 6.5% increase is the lowest increase that we've seen in over a year and a half now. So really just some reassuring data out there that does illustrate inflation peaked in June of 2022, and it is in fact beginning to roll over relatively quickly. So you're starting to see that in terms of market participants' expectations for forward interest rate hikes, especially south of the border in the United States. So now for the February 1st Fed meeting, market participants are largely pricing in an increase of just 25 basis points. We've put to bed any conversation around 75 basis points, and 50 might seem like it would be unnecessary at this point in the interest rate cycle, especially when looking at this inflationary data. We also had financial earnings out on Friday out of the U.S. Big banks. JP Morgan was one to watch in particular, that they're really starting to build up their provisions for consumer loan losses. This just reinforces the idea that we might see a weaker economy in the back half of the year. And once again, this is around the narrative that interest rates will likely peak out in the next quarter or two as we begin to see economic data that would suggest the Fed's higher interest rate is working to slow the economy. So we just talked about all this stuff in this week's Market Watch Weekly. My apologies, I know we sound like a broken record around the inflationary conversations, but if this will, of course, be the driving narrative for markets over the next few quarters. So I encourage you guys to take a read. I hope everyone enjoys the weekend, and we will talk to you again next week. Cheers.